Ladies and gentlemen, we are live. You are in store for a very special presentation from my man, Chris. He's going to be diving in and letting you guys know a lot of stuff that you need to know in this real estate business today. Get fired up, get excited. Chris, let's crush it. Thank you, man.
All right. Thank you, my man. Appreciate it. All right, everyone. Hi, how are you? Welcome, everyone. Thank you for coming. Thank you very much for coming to this presentation. I think you're going to learn a lot. You're going to find out that there's a lot of product available for you to purchase real estate, refinance real estate, get cash out of real estate, help other people, self-employed borrowers get the money they need to buy your investment properties, and the money you need for fix and flips, fix and hold, new construction, hard money, small balance, commercial. We are an A to Z lender. So I want you to take a look at this screen. This screen is welcome to TAM Lending Center. We are an A to Z mortgage banker. That means we have every mortgage product available. We have your FHA, VA, conventional, USDA. We have in-house underwriting, in-house processing. We can pull the trigger. If there's a problem, we can resolve it, and we can help you. And you would utilize these products for your buyers of your fix and flips, or you can, if you ever find any self-employed borrowers that are looking for money but can't find it anywhere else, we can help them out as well. We have a newsletter that we're putting out, and if you'd like to get the newsletter, you need to go to my email. It's right there at DiCristo@tamlending.com, and every week we'll keep you updated and in tune to what's happening in the industry, the different products that are coming out, how we can help you, investors that be willing to go into deals with you, properties that we found that could be great deals for you, as well as all the different mortgage products that are available. And if you read on the screen, we're talking about money for real estate investments, fix and flips, new construction, apartment buildings, retail shopping centers, office buildings, and much more. Blanket loans, bridge loans, asset-based lending loans. We have it all. And I'm going to go through that with you and show you the different products and how they can help you. And these loans, we go from anywhere from $50,000 to $30 million and above in special circumstances, depending on the product and the property. We're doing a lot of business today in New York and Brooklyn. We're doing $2 million brownstones that we're lending the money to purchase them, and then we're giving them another $800 to $1 million to fix them up, and then they're converting those brownstones into 3 and 4 condos, and they're selling those condos for $1 million, 2, 3 apiece. We are all over the country. We're in 48 states, so you don't have to be locked into one market. Anywhere you find an opportunity, you can give us a call, and we can help you move forward with that. So please just send your email to DiCristo@tamlending.com, and we'll keep you up to date. And you ever need us, you'll just give us a call. It could be videos, flyers, guidelines, mortgage products, properties, investors that want to work with you, to lend you money, hard money lenders, anything that you need. We are also a big proponent of, you don't go out and find a home, you find the money first. So what that means is, you come to us, we take all your information, we get you pre-approved, and we give you a certificate on the amount of money that you're qualified for that we're willing to give you. And that's just like being a cash buyer. Once you get that certificate, you are approved. The only thing that would have to be done after that is to get an appraisal on the property. And if the property appraises, you're going to get the loan. Okay, so let's try and go into some products now so you can see what we do have available. All right, so here's our what we call RTL, Residential Transitional Loans. This is our division that handles all your fix and flip, bridge loans, debt service loans, and ground up construction. And you can see here on this chart what the different guidelines are. So we'll do single family residential homes, 2 to 4 units, condominiums, and townhomes in your fix and flip. And when we get into the commercial section, you'll also see that we'll do fix and flips and fix and holds from 5 unit up to hundreds of unit buildings as well. These loan amounts for your local fix and flips are $50,000 to $5 million. We lend up to 90% on the purchase and up to 75% on the refinance. So on your fix and flip, you'll get 90% acquisition and 100% of your rehab budget. The loan terms are anywhere from 12 to 24 months. You can go down as low as a 600 credit score, and our ARV is at 70 right now, and soon to be increased. New investors, okay. If you're brand new, don't worry about the experience. We do have funds available for new investors.
Hey, Chris, just to let you know, the attendees cannot see your screen. So if you have a specific chart that you're trying to show, it's not up at the moment.
Can you see that chart?
I can only see your email at the moment.
That's all you can see. Oh,
yeah, so you slide the chart over and it should pop right up.
What do you mean?
Slide it over wherever your email tab is.
So there, you still can't see it, right?
Nope, your email's still up at the moment.
Can you see that?
Still your email.
Still my email. Well, I just pulled that out of my email. Oh, let's see. Let's go back here. Hit share screen. How about now?
No, you've canceled the share screen, so you're gonna need to reshare your screen, and then we'll see what comes up as soon as that happens.
I think the way it works was here.
Here we go. All right.
Now you got it?
Yep, we got it. We're good. All right, thanks.
I can see how to do it now. Okay, sorry about that. All right, well, so we're back in the same form. I guess you guys never saw what I was talking about. So here it is again. You go to DiCristo at tamlending.com, and we will put you on a newsletter where we give you weekly alerts of all types of products and everything that we can do for you. The one point I wanted to bring out specifically was this approval certificate down here at the bottom, where we bring you in, we qualify you, take you through an application process, get you 90% qualified to the point of approval and to the amount, and give you a certificate based on the amount of money that you have readily available. So when you go out and you find a property, you can pull the trigger immediately. You don't have to wait to see if you can get approved to buy that property. So we'll give you, it's more like, it's not a credit line, but it works better than a credit line, because we have our fix and flip properties. You can get loans for as many properties as you want. There's no ceilings on the amount of properties you could be working on at any one time or getting financing for any one time. Also on your debt service loans, you can go out and buy investment properties, 1 to 4 family dwellings, no income verification, and buy as many as you want. There's no ceilings on this product. So go to DiCristo at tamlending.com and just say that you're from Tang's organization, and we'll take care of you. We're A to Z lenders. I think you might have heard everything I said, so I won't repeat all that. All right, so let me see if I could pull up another screen. Okay, these are our no income verification programs. So we have what's called light doc and no ratio. Light doc is minimal documentation. We need a letter from a CPA stating that the borrower has a business and that business is in good standing. That's the only income information or verification that we need. This program is used for primary residence as well as investment properties. You can purchase a single family home. You could refinance a single family home. And why would I be talking about that to a bunch of investors? The reason is that, a lot of people need cash. Cash is locked into their primary residence. Maybe they don't qualify on a debt to income ratio on a Fannie Mae, Freddie Mac loan. And now they can go in with a product like this and pull that cash right out. You have investors of your own that have properties locally or a shore property that has a lot of equity locked up in it. And they're the type of person that, is a business person. They got a big home in Cherry Hill, New Jersey, and a home down in Avalon, and they drive a Mercedes Benz. Yet they're showing $80,000 on their tax returns. So we call that the smart accountant loan. And that's perfectly legal in this country. But unfortunately, they can't borrow any money. And this is the product that allows them to do that. So they can go into their real estate portfolio. They could pull the cash out to either become an investor for you or a partner with you or purchase properties from you, and you could work with that way, or refinance your own properties to pull cash out if you didn't have the ability to do so. We also have a owner occupied no ratio. So that means that there's no income verification whatsoever, no tax returns required at all. It's a very simple loan. It's an appraisal, a few documents that we need to see the assets in the bank that you may have. If it's a wage earner, we just need a verification of employment from the employer stating that they do have a job, or a CPA saying that their business is still in good standing, and they can borrow up to $2.5 million at a 55% LTV or $2 million at a 60. Back in this screen, we were up to 75 loan to value, up to $1 million, and 70% up to $1.5 million, 65 to $2 million, 60% to 2.5. We then go into the no income investor. This is an 80% LTV, no income whatsoever. This is not a debt service loan. This is a no income investor loan. So this is simply an appraisal, credit check, assets verified for the down payment, and you're approved. It's that simple. You have the investor light doc, minimum loan amount $100,000, cash out to 60% of the value of the property if you want to refinance. You have a 65% minimum credit score at 680, 720. You have your maximum LTV, 3 months cash reserves, 500 to $1 million, 1 million to 2 million, is based on your reserves. So you can easily get up to 1 million, 500,000 to 1 million with minimum reserves. And then if you have 12-month reserves, you can borrow $1 million on this program. No tax returns required, no income verification. Investor DCR, I would assume you guys are very familiar with that. It's been a very successful product for us over the last few years and continues to do so. This is where you just take you want to purchase a property, a 1 to 4 family investment property. We take the principal, interest, taxes, and insurance, and then the market rent for that property does not have to be rented. It could be a vacant property. The appraiser will give us the market rent, and we just divide the market rent into the principal, interest, tax, insurance that you're going to have to pay, and you come up with a debt service ratio. So that would be a 100, a 1-to-1, a 1-to-2, 1-to-3. So if you have a property that the market rent is $2,000 a month, your principal, interest, tax, insurance is $2,000 a month, that's a 100. You qualify. As long as it appraises, you get the property. A 1-1, a 1-2, a 1-3, a 1-4 is a better ratio and a positive cash flow, and that gets you a better interest rate. We do go negative down to 80. So you can buy a negative cash flow property, no income verification, with this program. Okay. So I gotta go share. All right, give me 1 second. I got to get back into my email, pull up another chart. This is going to be our fix and flip, fix and hold, new construction. There's a long way around, but I think we got it. Okay, I hope everybody can see this screen. This is, and if you can't, if you just take notes, I'll go over all the guidelines. Fix and flip. Again, we go up to $5 million, $50,000 to $5 million, 90 up to 90% of the acquisition, and 75% on a refinance, down to a 600 credit score. Short-term bridge. Bridge is a great program. A bridge is a program that there's really not much involved at all. It's for single-family residents, 2 to 4 units, condos, and townhouses, 50,000 to 3 million. The LTVs are 75%. You need a little money down, but there's no questions asked. Credit check and approval down to a 600 credit score, and you're approved. That's a great program for a short-term, 12 to 24-month loan. You find a great opportunity out there. You're not going to fix it. You're just going to buy it and wholesale it. You're going to flip it, or you just want to get it so you don't lose it and then figure it out later. This is a great program to make sure that you have the money available, not to lose a transaction and get that great deal that you just found. And again, you'll have that certificate from us. You'll know exactly what you can do, how much money you have, and you can pull the trigger on any property that you find. That's the key to success. Having the money first, knowing that you have the money, being confident to make that offer. Debt servicing long-term investors, $50,000 to $6.5 million. Single family, 2 to 4 unit and condominiums, 80% LTV on a purchase, 75 on a refi, 70% on cash out. You got a debt service loan of 100 with this. That means that, again, your principal, interest, tax, insurance, and your rental income are 100%. You got a 30-year fixed rate. You can get a 5-1 arm, 7-1 arm, but on the arms, a prepayment penalty is required. So you want to make sure you want to hold these properties at least 3 years, or it will be a reduced prepayment penalty as the years go by. Minimum 650 credit score, purchase, refinance, cash out. Then we have ground up construction. It's been hard to get ground up construction ever since the pandemic. We've been working very hard to find this product. So new builds, ground up, we have plenty of money available now, from 50,000 to 5 million on any type of project, from a single family build to subdivisions or high-rise apartment complexes, or whatever you need, up to $5 million. Single family residence, 2 to 4 units, condominiums and townhouses. You have an 85% LTC. So an LTC is loan to cost, not loan to value. So loan to cost is very simple. You take the cost of your ground and the cost of your build, you add them together, and you get 85% of that. You got 15% skin in the game. It's really that simple. If I have a lot that's worth $100,000 and I need 200 to build, I have $300,000 total cost to build, loan to cost. I'll give you 85% of that $300,000 on a draw basis. If you own ground already, you can use that as a collateral. We'll pull cash out of that. And this goes down to a minimum, again, of 600 credit score, new construction and residential subdivisions. All right, now I'm going to go back into the inbox and try and find another. Try and find my commercial matrix. And okay, this matrix here. Okay, I hope everybody can see this screen. This is a very important screen. This is a great bunch of products. Oh, no, that's not it. Hold on one second. Sorry about this, gentlemen and ladies. Not familiar with this system, and I should have had a PowerPoint up and running. My mistake. Now we have commercial money from 50,000 to 30 million. We have all kind of products available to help you succeed. You can get money for fix and flip for 5, 10, 15, 20 unit apartment buildings, um, shopping centers, office buildings, motels, hotels, any income producing property. We have products that are readily available to fund those properties. And again, there's a lot of no income verification on a lot of these properties that no tax returns required because the property, the money is in the asset, the security, the collateral is all in the asset. So based on that, you don't have to worry about it. If you want to buy a $20 million property, and people say, "Well, I could never afford to do that." Yes, you can. I mean, because if the asset is there, then you can do it. If the asset can support the loan, that's what we're really looking at. Because how could you ever pay a $20 million loan back? How could anyone ever pay a $20 million loan back based on their qualifications? So the asset is what gets the approval. You have to be credit worthy, and of course, you have to show that you have some experience to borrow that kind of money. But besides that, you're good. Okay, so on this matrix here, pretty sure we will be able to pull this. I don't know. Let's see. No. Well, I guess just having a problem with doing this today. So based on this matrix here, I don't know if you can see this screen. So we have all other types of loans. I'm just going to explain it to you. This is really not working very well based on the pulling up these matrices. So let's just leave it at this. So you have a lot of different type of products out there today. You have your bank statement loan. So a bank statement loan is a loan that you're utilized if you don't qualify for a Fannie Mae, Freddie Mac, FHA, VA loan. A bank statement loan was designed because back in 2010, they created the Dodd-Frank Act. The Dodd-Frank Act states that if you don't simply put, if you don't qualify for a regular conventional loan, if you don't hit the debt to income ratio, you can't borrow the money. It's really that simple. And the Obama administration made that so strong that it's a criminal act if a banker lends you money if you don't qualify. And this is a consumer product for your primary residence. And people just couldn't borrow money. So after a few years went by and the real estate market was not doing so well, the industry realized it needed to come up with products to allow people that did have the cash flow the opportunity to borrow money, take equity out of their property, and utilize that for other investments and just keep the real estate market moving. So they came up with a lot of different types of products. One product is a bank statement loan. A bank statement loan is where we simply take the last 12 or 24 months of your business and personal bank accounts, and all we look at is the deposits. We don't care about anything else inside of that bank statement except the deposits. We run that through a software program to average out your deposits, and we come up with an income. We then take that income and plug it into the 1003, which gives you your debt to income ratio, which qualifies under the Dodd-Frank Act. The Trump administration made that change in 2018 to qualify self-employed borrowers. So that program can be used for investments as well. So if you have a lot of money, that's not a lot of money, but a continuous amount of money running through your deposits every month, this program will work for you for not only primary, but for investments as well. It's a great program. We sell a lot of this program. It really helps a lot of people out. It can be used for 1 to 4 family dwellings, single family homes, condos, townhouses, anything that any conventional loan can do, this loan can do as well. Self-employed borrowers is the main target of this. So if you do know people that can help you by pulling money out of their properties that's locked in, and they don't think they can do that because they've been turned down by some other banks, they can do it. They use a bank statement program, and we can pull the equity out of their properties to invest in real estate or purchase a property from you. If you have a property you need to sell and the person doesn't think they don't qualify, maybe they do, just let me know, give us a call. We'll find out. We have a lot of different products that may make it work for them. We have another product called asset-based lending. Asset-based lending is where we take any cash in the bank, stocks, bonds, any kind of asset, except real estate. It's got to be something that has to do with cash, gold, silver, stocks, bonds, IRAs, 401ks. And we don't pull that money. We just use that money as a source for our formula to create a debt to income ratio that then qualifies for the Dodd-Frank Act. So if you have $500,000 in an IRA, we can take that and lend you a substantial amount of money just based on using that IRA into our formula. Again, we do not want to collateralize that IRA. We just use it as a formula. It's a great program. Now, let's say you have an IRA and bank statements, but your deposits and your bank statements, you don't qualify, and your asset-based lending with your IRA or 401k or any other stocks or bonds, you don't qualify. I can do what's called a hybrid, and I can connect the asset-based lending to the bank statement loan and get you qualified. So they're incredible products. They work really well. Then you have the debt service loans. The debt service loans are all over the place. They're great loans, no income verification. You can utilize them for 1 to 4 family dwelling, single family, condominium, townhouses. Anything works under 1 to 4. We also have debt service loans above 4 units in our commercial division that work the same way. Right? Again, we just to subdivide. All we got to do is divide the principal, interest, tax, insurance into what the appraiser tells us that the market rent is, and if it hits from a negative down to a negative 80 up to to 100, you're approved. Anything at 100, you're based on the par rates. At 101, 102, 103, 104, 105, your rate just simply gets better. That's another great program. We have foreign national programs. The debt service programs works for foreign nationals as well. We specialize in the foreign national programs. We have your foreign national. This is a program that the borrower is living outside of the country. We're utilizing his income, his job, his bank, everything in the country where he originates from, and we close the loan. You have a permanent resident alien, you have a non-resident alien, and you have an ITIN. And every one of these different foreigners fall into different buckets, and we can handle any one of those individuals to help them buy investment properties or to help you sell your property to them. We have non-warrantable condos, great product. Anytime you find a high rise or even a single family or a townhouse development or condominium development that has a higher investor ratio than a primary owner ratio, that's a non-warrantable condo. What that means is Fannie Mae, Freddie Mac, VA, FHA will not fund that property. We will. So we can definitely save your deal on that. If you do wind up buying a property like that and you find out that it's not warrantable, give us a call. We'll help you out. Hard money. We have hard money readily available from anywhere from 10% to 15%, depending on the situation. And we go up to $6 million in hard money loans. So that's about it. That's what we have. What do I love to stress is to go to Chris DiCristo, C DiCristo at tamlending.com. Let me try and pull that up one more time, because this is really what we would like for you to do. I know that there's a lot. There was a lot that was said here. You have a lot of different people that you can go to. We have a lot of competitors in the tag organization that are all great people with great products. And I'm sure there's a lot of things that we do that they can do for you just as good or maybe better sometimes. But as far as we're concerned, we have really spent a lot of time and money going out to the industry, finding every product available from A to Z. And if we can't do the loan, it's pretty certain that it can't be done. We go that far. We have private lenders. We have investors that will come in with you. If you find a property and you simply can't get a mortgage any way whatsoever, we have investors that'll come in with you to help you purchase that property, share in the profits with you, and get you going that way. We have newbie loans. I know that there's a lot of our competitors out there that are always looking for experience, but we have been able to find some great products for the people that are just starting out and want to do a fix and flip. We will help you. We will fund that loan. Again, we go from Fannie Mae, Freddie Mac, FHA conventional, VA, alternative funding. Alternative funding is when you have a conventional loan, a Fannie Mae loan, and it falls out due to maybe a credit score or an LTV or something that a divorce or something that Fannie Mae just won't accept. There's banks out there, there's investors, insurance companies that will fund that loan, will still approve that loan. So let's say you had a Fannie Mae loan you were trying to get and you got denied for one of those reasons. We would be able to still write that loan. And the only thing that would happen to that borrower is that we would go up another maybe half a point in the rate to maybe 3/4, depending on the situation, but they close the loan. So if you have a borrower that's buying one of your properties and for some reason the realtor tells you that the loan fell out and they received the denial, just pick up the phone and give us a call, and we may have a product that we can easily close that loan with. So that's the power of TAM Lending, your A to Z lender. We have every product available from single family homes to 50 million, 70. We did a $70 million loan. We did not. I should take that back. The investor that we work with was just telling me last couple of weeks ago that they did a $70 million loan. We have products that you can do primary residence up to 10, 20 million dollars. Now, you may say, well, what is that? There's flats, there's condos in New York, Miami, and certain areas that people are paying $15,000, $20,000 for their condominium. We can do those loans. I mean, there's not much we can't do. So if you're interested, go to Chris DiCristo. C DiCristo at tamlending.com. I'm going to try and pull that up before I end this terrible presentation. Let's see if I can find that. I don't know if I can. So you get CDICRISTO at tamlending.com. And please don't think that my ability to get you money is as good as my ability with this stream internet presentation. Okay. Let's see if we can find that. Oh, can't find it. All right. Well, I guess at this point, I don't know if there's any way to open it up to the chat. If anybody has any questions, Let me see if I can just do this.
All right, Chris, we have our first question. I'll hit the questions for you. We got a few minutes here.
Okay.
All right, so Jimmy asked, do you do buy and hold lending, and what is the rate for a new investor? I know you kind of covered that briefly, but real quick.
Yes, we do buy and hold investing. We have many products for buy and hold. There's a no income verification. The rates for a no income verification product start at 4.5% and go up to 7. We also have full block products that are down to around the low 3s.
All right, and for anyone who is wondering about Chris's email, it's posted right here down below. So make sure you get that email now. That's CDICRISTO@tamlending.com. That is Chris's email. Next question here, guys. If you guys have questions, please put them down now. We got time for maybe 1, 2 more. Kathy asked, great programs, Chris. I have a few clients looking for no docs. She'll be in touch. Awesome, Kathy. How do I reach you, Chris? Email. Right there. Email's down below. All right. Let's see. No income. So what if you're a new investor, no income in the business yet? I guess I would want to ask you that, Chris, just speaking in general, knowing that you guys have worked with a lot of investors. What are some creative ways that you've seen new investors kind of, maneuver when it comes to getting started with no income?
Well, no income, all of our RTL, fix and flip, fix and hold products are no income verification loans. And except for a few of our construction loans that we run through federal banks that do need some documentation. But for the new investor, what we find with a lot of our investors is that they're always looking for experience. So we put together a fund. We found private investors, and I've been building homes all my life. I started building in 1985. I built subdivision, single-family homes. So I know what it is and what it takes, and how hard it is for people to enter into the business. And I know that they can do it. And with our guidance, we help them. The new investor with us does not get penalized. They get the same exact loan to value as the seasoned investor. We help them through starting out. We help them with their budgets. We help them with pricing things out. We help them with putting things together. We watch over it. We protect our money. We're protecting them, but we're protecting ourselves as well. And so we really help them from start to finish get through 1 or 2 products. I had a young lady that came to me a couple of years ago. She said she wanted to get into business. We started her out with one. She was only able to get a 65 LTV, but we did get her the money. It was fortunate that she had the down payment. And it's been a year and a half, and she's on her 4th fix and flip now. And she never built a home in her life. But now we have better products for them. We created the product. We have our own funding for newbies.
Wow. So it sounds like to me, like, because I know a lot of people, they don't want to spend time with someone who's new or that doesn't have much experience or whatever the circumstances may be. And they would rather invest their time into people who are more experienced, which of course it has its pros and cons. But that story that you just shared really just highlighted why I guess you guys do spend so much time with people who are new, because if you can help them in the beginning, I'm sure they would love you forever. Is that correct?
That's exactly right. We're trying to create a family. We're trying to create a relationship. And she bought one, and now it turned into 4 loans. And then besides that, we got numerous referrals from her for other things, like with all of our other products.
Yeah.
Especially now the rate's been so low. We're a strong A-paper company as well. So the refi market's been hot. We're down to 2.25% on our rates for the FHA program.
That's awesome, man. Good work. All right, let's go. So this would be the last. We'll do these last 2 questions here. Here we go. Someone asked, do you have time to chat after this call? So if they wanted to schedule a call with you, do you do consultation calls or any type of calls, or just reach you through email?
Email is, I don't know how many people would be trying to get a hold of me. Email is the best way to get a hold of me.
Someone's calling him now. He's getting a private call now. The man.
I'll be more than happy to put my phone number out. This is my cell phone.
Yeah, put it out. I'll post it up for him. All right, guys.
Yeah, I am the senior VP and partner and one of the partners at TAM Lending. I will have a lot of people that work for me in our division that will be helping you as well. I'd be more than happy to talk to anybody at any time.
All right. All right, and so let's do these final questions here so I can add this banner for you guys. There's Chris's contact info, email, and number. All right, so final two questions is FICO score. What are the typical ranges for FICO score? What's the lowest you guys would go?
We go down to 600 on your fix and flip and fix and hold. Fix and hold is really a two-step program. You down to 600 on the fix, and then it converts. Then we have to refinance you into a debt service loan, and that goes up to as low as 620.
Great. All right, I believe that is it. It's good to know. Looking to get started in 2021. Let's get you started now. Come on, come on. And Catherine says, yes, Chris, very inspiring story. All right, Chris.
All right. Thank you very much. You guys are great. Thank you for having me.